Going on, everybody? This is the One with the TMF podcast, and I'm going to do a quick video about options trading. And I know I look ridiculous. I have this weird thing on my head. It is actually a migraine headache. And if you get headaches, let me tell you, this thing, the jam, little ice pack in it, sits on your head. You look like a Russian in winter, but I promise you, it is a lifesaver. So, moving on. Before I get started, if you like the channel, if you want to learn more content about stocks and trading, if you want to watch funny videos, if you want to learn about current events, or anything else. Really, I do videos about all kinds of stuff. Hit the like button with the subscribe button, and you'll be notified. So, moving on, options trading. Why do I trade options? If you are trying to grow an account with investments and money, options is the fastest way to take a little bit of money and turn it into a lot of money. It's also the fastest way to take a lot of money and turn it into a little bit of money. Is it gambling? Kind of. It's more of an educated gamble. It also has built-in factors to limit your risk, right? So you could lose 100% of your investment. You spend $1,000 on options, you could lose $1,000, 100%. You can also stop loss it, only lose maybe $20 or $40 or $50, whatever you're comfortable losing. Options trading gives you the right to buy or sell an asset like a stock at a certain price on a certain day. In order for your options to, we'll call it violently increase in profit or losses, the stock has to move pretty volatily to the upside or the downside, which is usually high volume, high momentum. There are some things that I've learned recently about options trading that I wasn't really privy to kind of going into this. I knew basically it's like this. You buy a call option, you want the stock to go up. You buy a put option, you want the stock to go down. There are more complicated options trading, such as credit spreads and credit debits and butterfly spreads, and where you buy call, sell puts, buy call, sell calls. You can kind of straddle it. But the most common that people are going to do is they're going to buy a call option or buy a put option. So if you're looking at a stock, such as pick any stock, really just pick one. Space went crazy on Friday, and you say, you know what, I'm going to buy a call option that is in the money, which means it's already at a certain price. And we're going to go ahead and look at some options here. I'm going to go to the most controversial one on my channel, because why not? AMC. Now, I'm also looking at this in Robinhood. I do like Robinhood for their options, the UI, user interface. I like it. It gives you the easiest way to understand. It's also, if you're buying and selling them, it's probably the easiest way to buy and sell an option and trade it and do it fast, and it executes. And I'll show you the difference when I go through WEBULL or TD Ameritrade. Jesus help me on TD Ameritrade. But let's just say right here, we're looking at AMC, current share price $54.22. All strike prices that are $54.22 or lower are considered in the money options. They are already at the strike price or below, right? Those are generally going to be more expensive. They're also not going to move quite as quick, but they don't have to move as far to get to your break-even price. What does that mean? That means on the date, this is July 2nd, expiration, next Friday. If on next Friday, this stock price is not at $58.63, which is the break-even for the $54 strike, this is going to be pretty much worthless. 1 cent per contract. Currently trading at $4.63. That allows you to control 100 shares. Take all of these numbers and multiply them by 100. $4.63 is $463. We can see that if we add it over here. It's actually going to round it up in increments of 5 cents, so $4.65. Sometimes you can buy these on the fly, and it will actually execute for $4.63, but you will not be able to sell it unless it's $4.65 or $4.60. They're going to be 5 cent increments on most of these, right? So we got that out the way. Now, what do these other numbers mean? On Robinhood, it shows you to break even, stock must move in the direction 8% up, right? Percent change, change $2.60 for where it's currently trading. That will get it into where it's not completely worthless on day of expiration. Now, What you can do is you can buy this contract and sell this contract, just like an underlying stock, right? I buy a stock, I sell a stock. I can also exercise the option. Most people are not ever going to do this. The majority of you will never click exercise. Exercise means I will buy the stock, 100 shares at the strike price, $54, $5,400, right? That's what that would be. And you have to have that money in your brokerage account in order to exercise the option. Then you'll have these shares. Now, why would you want to do that? Let's just say the stock goes way down and it ends up going down to $45. You're paying $54. You can lose all your money, your $463, or you can buy $5,400 worth of their stock and hope it goes back up above $54, and then you can sell the stock, get your money back. Two ways to play that, right? Same goes for puts. Look at a put, we're expecting it to go down. If we're going to buy a $54 put, the break even, it needs to go down to 49.7, it needs to go down 9.13%, or about to, well, shoot, that's more over that, about $5, right? It needs to go down $5 or so in order for that to be worth something. So the farther the stock goes down, the more money this put will be worth. Right now it's at 473. If it goes down rapidly, big volatile spike. Let's see if there's any even on the chart here. I'm just gonna pull it up. WEBULL, because I like WEBULL better. Maybe I can get rid of my from my previous video, this giant rectangle that I had on here. It'd be nice to eliminate that. Bam. All right. What would make these things worth some money? This part right here, this spike right here. This spike right here in volume and percent change, this little run up could take that option from $4 and turn it into $5. What does that mean for you? You paid $400 for that contract. It's now worth $500. However, the stock only moved 1%. Your option may move 100%. That is possible. Now with AMC, that's going to be unlikely because the option chain is so far out the money. And this is one thing that I've talked about in my AMC videos, just to briefly touch on it. AMC, the likelihood of it moving 8% in one day might be okay. It's done it. But the odds of it moving up there, it has to move that much to buy an in the money call for that thing to be worth anything. You want to go out of the money, you go, all right, well, I bet AMC is going to hit $65. That's a $223 contract. It's got to move 20% to get there, and it's going to have to move there rather quickly. Now, if it does, that $2.23 contract might be worth $8, $9, $10, $12, right? Especially the faster it hits that before the day of expiration, the more money that contract's going to be worth. So, what have I seen? And where am I going with this? Well, where I'm going with this is I've learned to play stocks that don't have to have that crazy volatility in order to make you money. What does that mean? That means we can take a stock like NVIDIA, something that you would probably never buy shares in because the share price is so high, $761 a share, or a stock like Tesla, or a stock like Apple or Amazon, right? Most people aren't going to buy one share of NVIDIA and hope it goes up $20 and then sell it and try to get a profit on that, right? But look at NVIDIA. NVIDIA opened at 770, 771, and it ended up closing down here at 760. So it moved $11, which honestly is not a huge difference. We went from up 0.5% to down 0.1%. So you moved less than, 0.6% throughout the day. We did have a spike here. It was down 1.28%. Your put option, had you bought a put right here at the top at 9:30, I don't recommend doing that, by the way. Had you bought a put, and this is July 2nd expiration, and it's not even going to tell me what it was at the beginning of that, but let's say you bought something that ended in the money. So 761, and you bought a put that was up there. You could have probably spent $1,500, $1,700, $2,000. But that's not what it would have cost you on that day, right? It would have been much less. So I have here currently NVIDIA calls, 775 strikes for July 2nd. I'm an average in at $9.35. I'm currently down 18% on these option plays. Now, I bought the first one because NVIDIA was on a solid tear up. What do I mean by that? I mean, NVIDIA was on a run. Look at the 1 hour chart. It was on a run. It was headed up. Took a big hit on Friday and it kind of slowly recovered. Now keep in mind, a big hit's 1.25%. Big hit's not 20%. However, my option did take a pretty decent hit. And it's still bull flagging up. I'm not going to worry too much about NVIDIA. You do have a stock split, the other stuff, we can talk about NVIDIA later. But this is just about the options chain. So we're buying a call option, and we're going to look at them here. This would be a call expiring July 2nd. For this stock has to move only 1%, 1.4%, 1.2%. Let's go out of the money. 2.5%, 2% in 5 days. Really, we want it to move that much quicker than that. However, what are the odds of that stock moving 2% versus AMC moving 20%? Right? So these, I've watched NVIDIA as specifically call options go from $2-3 a contract up to $15 a contract within a matter of 20-30 minutes, 2-3 hours. So if you had played Space on Friday, SPCE, and you had bought calls Friday morning, we can't see what they were, which is unfortunate. And you know, we saw this happen. The strike price actually ended at $60 on Friday. That was as high as it went. But now we're going to see them up to 100 as the stock hit a certain price level. But these could go up exponentially. Some call options went up 1,000%, which is crazy. So it is an easy way to grow your account. However, take it from me. I've lost money on options. Plenty of times lost money Friday on options, playing Netflix. The stock doesn't go, give yourself time. You don't have to buy something that expires Friday. Give yourself 2 weeks. They're going to cost more money, but they're going to be less volatile. Now, if you really honestly believe that a stock is going to move one way or another rather quickly, or it's on a run up on that day, jump in, jump out. Trading these will act just like a day trade. Each individual contract. So when you go in there and you buy, like, I want to buy Virgin Galactic stock, I can buy that stock and sell it the same day. However, it's 1 day trade. I can buy it once, I could sell it off. I could sell half, all the way down. As the stock ran up, that's 1 day trade. However, with options, each contract is its own transaction. It's its own buy and sell. So if you buy a $50 put like I have here, and you sell it, and you buy a call, and you sell it, it's 2 day trades. So keep that in mind if you're wanting to get into this. Some of these things you got to get in now. You're going to see alerts on TikTok, YouTube, if you're on Discords, if you're on wherever, of people putting out, you know, $50 put, so it'd be $50 P, you know, and then 7/2 expiration. That's how they're going to usually throw those calls out there. And you'll see them. Oh, why are we paying $2.62 when Virgin Galactic's trading at $58? Because that's how much the contract costs. Now, if Virgin Galactic takes a nice little tumble on Monday, I'm not telling you, like, if you watched my Virgin video, I'm not saying that the stock ain't worth money. I'm just saying it's going to have a pullback. That's why I bought a put. And I only bought one because I ain't crazy, just in case some bitch runs up to $70. I only bought one, and I have until the end of the week for it to make money. Now, if it doesn't, and it wants to continue to go down, I can just sell it. Right? It's not a day trade. I bought it on Friday, saw it on Monday. It's okay. I can take that. Now, here's the thing. I'm a part of Discord, 2 of them. I also watch other people trade. Sometimes this thing here will take a big hit. Big old hit. On, say, Monday or Tuesday. And the stock runs up. Let's say it runs up to $80 Monday and Tuesday. And your put is now worth 40 cents. And you're down 80%. If that stock goes from $70 or $80 back down to my break-even-ish 47, it can happen. That put will still be worth more than I paid for it. So don't freak out. In the options game, sometimes you just have to hold it, have faith in your conviction in your play, Wait it out if you have time. I have a couple days. I bought that for August. I have plenty of time. Wouldn't worry about it. So keep that in mind. Trading options. It can be extremely profitable. It can also be a big risk. Here's the thing: it's a gamble, but it's an educated gamble. Don't just jump in blindly. I've done it. It's worked out. Dude, I've had someone come in my chat and be like, "Dude, blank, blank, blank call," and I look at, I do this because we don't have much time. Stock looks like it's on up. Send it. Boom. Next thing you know, you paid 50 cents for a contract. It's a cheap stock, and it's worth $1.50. You don't have to pay this much for contracts. Look at let's look at AHT for example. Ashford Hospitality Trust. Excuse me, Ashford Hospitality Trust. You could buy a contract here for 23 cents. It's 23 bucks. You could buy as many as you want. You don't have to buy one. You could buy 100 of them for 2,500 bucks. And if that goes up from 23 cents to 33 cents, how much is that worth? Pretty simple. It goes up 10 cents per 100. You just bought 2,500 times 10. You just made some pretty good money, right? If 23-cent contract goes to 46-cent contract, it's 100% return. So keep that in mind. You do not have to buy a stock that's crazy expensive just for you to recoup some of your money. This pin to a dual call, these contracts were $235 each, currently trading at $212, and it opened at $333, and I should have sold them. And I've got plenty of time on those for it to go up a little bit more. And it only moved a little bit. It didn't go some crazy number. You know, we're talking a stock that moved relatively $1. And that dollar would have printed me $200 in profit. And it probably still will, honestly. We can look at PDD on a chart and see if your conviction to hold remains true. And this, as long as this is continues to be, this is the 1 hour, a bullish flag and a run up, you are good to go. Now, if it continues to be bearish and wants to sell off, we're going to have ourselves a harder time and we'll just exit that play. So, I hope this helps some of you understand a little bit of options. There are people making crazy money. There's someone in our Discord turned $1,000 into 20 grand last week, which was insane. Someone turned, God, there was a space contract. Dude turned like a, I'm trying to remember. It was a post on Reddit, so take it for what it is. Could be real, could be fudge. It was a lot. It was like 150,000 to like 1.5 million. Crazy money, and you can do that, but be careful. People are going to tell me that it's FUD, it's whatever, don't do it, and options trading is dangerous. You do have to apply for options trading. So if you're trading on WEBULL, and we're going to go over a couple things too before I exit, so hang on tight. If you're trading on WEBULL, you do have to apply for options trading in your account. Really, with all the brokerages, you do have to do that. You have to answer a couple questions. If you say you've never done it before, you don't know what it is, you don't know how to do it, you're probably going to get denied. Excuse me. So just say, yes, I've traded options, I know what I'm doing. They will approve your account for options trading. So keep that in mind. Now I'm going to show you what I mean when I say Robinhood is easy to use. I'm just going to pull this up because we can see all the options chain here. Right? We can see I just want to add one, it's 250. I do believe that Robinhood's price updates faster than the other brokerages. So when this goes from 250 to 253 to 255 to 270 to 280 in real time, that's what that contract will cost you. When I go to WEBULL, I'm on into it. I have to go up here to this options tab. Here's my contract. These are all calls selected up here. Don't make the mistake of thinking freaking they're all the same. I accidentally bought a put on freaking Wish last week because I was like, man, I was in such a tizzy watching too much. Honestly, I just got a little bit distracted and overwhelmed and ended up buying a put. And I was like, why is that price different? Look, man, shit happens. But you want to buy a call, right? I click here, bam. Now I have to go down here. Always wants me to sell it for some reason. I'm not selling a call. In order to sell it, you need to have 100 shares. You don't have 100 shares. You got to click buy. It's already pre-filled at 10. I only want one. Limit order, limit price, 470. That should be pretty accurate. Let's just type PDD. We got PDD up. We got a 125 strike. July 2nd. Let's just see if the price is the same. Let's say 453 and 470, right? 125 strike, July 2nd, expiration. So here's our intermediate. So that's gonna, if you were to send that right now, you're gonna pay $4.70 on WEBULL. If you were to send the same one and you can't send it now, the market's closed. You only trade options during 9:30 to 4. That's it. But same option, 125 is 453 on Robinhood. If you go into WEBULL and you put 453 here and it's still 453 on Robinhood, it will fill that order. That's what the price is. You're paying the ask always on WEBULL. The bid is 435. That's what somebody wants to pay for the contract. They want to sell it for 470. Robinhood is in the middle. WEBULL is telling you pay the ask. Keep that in mind. You can lose $17 just by sending that. Now, let's go over to TD Ameritrade, and I will show you why that one burns my gears to do. And I just, oh, Jesus Christ. Let's fill this in, because why not? All right, let's make sure it doesn't send me something. All right, so go trade options. Now, if I was doing this in real time, this is where I have a problem. PDD, options chain, calls, 125 strike, buy to open, one contract, limit order. If I put a limit order in, I can put 453, day in force, right? It's not usually going to let you buy them at market, which would be the ask. Sometimes it will. A lot of times it wants you to put in a 453, which you can see on here. It is it's not even telling you what that is. It's just telling you that the bid and ask. 470 is the ask, obviously. I put in at 453, then I hit review order, and I see it all. So it's going to cost me to buy it, and then I can hit place order. So it takes a little longer than Robinhood. And if the stock is moving fast, you're going to have to just beef that ask up, man. It's the only way you're going to get to it. But keep that in mind. I do see people that jump on my channel and throw some options fault out there. Also, I see a lot of people talking about options and have no idea what it means. It is risky. You can lose 100% of your money fast. If you change this expiration farther out, you will lose your money much slower. That is due to the Greeks, the delta, the gamma, the theta, the vega. Right? Theta, that's how much it costs you to hold it every day. Delta is how fast it moves side to side. And when they talk about gamma squeezes, all that stuff, that's a whole different topic. But just know, if I buy this contract right here, let's into it. Well, I'll just look my already. Share price. Call. It's PBD. Which is also good that it's been upgraded to sit 165. So they are expecting Pinduoduo to go up, 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 up. Where did my calls go? There it is. All right. So for me to hold this every day is going to cost me $26. It's 26 cents. That's times 100. $26. You can also just take 26 cents off of this number. That'll tell you what it costs you as well. And it's going to change as the volatility of the stock changes. The implied volatility will also make that beta go crazy. You get something that's a little lower, a little less risky. So keep that in mind. At this one, at one point, this thing was worth $3.70, which would be $140 more than I paid for it, just about. So keep that in mind. For $135. I paid $235. I cash out that plus the $135. So if you're interested in knowing more, we can get more in depth in that. I do highly recommend you watch other YouTube videos on it. Join a Discord, sounds good. I am actually currently a part of the Jay Dunn Trades Discord, and I've liked it. Saw him on TikTok, honestly, and I liked his, I don't know, I liked his energy. I liked the way he talked to people, and I checked out the Discord, and I paid like $20 to join his Discord for the week, and I liked what I saw. Look, man, they're making money. Those guys are making money, no doubt about it. But if you liked the video, give me a like, hit the subscribe button, and remember, stay safe out there. Have a good weekend.